This is the London Fintech Podcast, bringing you practical insights and approaches, stories and inspiration from the innovators who are building the new world of financial services. This podcast is brought to you by NextWave, strategy specialists and solutions for financial institutions. I'm Tony Clark, and on today's episode, we're going to be talking about building a fintech ground up, from the very first concept through to launch and beyond. We've had fintechs of all sizes, early stage, through unicorn status and listed businesses on the show. However, I'm excited about this conversation because I know how valuable it is for founders and fintechs to understand the real practicalities of mobilizing a digital business in the finance sector. And also because I know our guest today has and continues to be right in the trenches and hands-on with both the big topics like pitching clients and all the vital minutiae of creating a business, like systematic prospecting and CRM activities and websites and all the rest at a really detailed level. I think this conversation should be a goldmine for anyone embarking on a similar journey, or frankly, anyone interested to understand what it takes to create a fintech. The business that is the topic of today's conversation is a unique insurtech called DA Insured. Alistair will tell us the DA stands for digital assets, so the clue is in the name as to what they provide, digital asset insurance, which at the date of this recording, we've just had the biggest crypto hack in history with the loss of $1.5 billion from the Bybit exchange. So not only relevant, but also timely. Alistair Heggie has worked as a consultant, a banker. He was an MD at UBS in operational risk for many years, a COO of a digital bank, and with DA Insured, won last year's Champions of Trust Award at the World Crypto Forum in Davos. So quite a background. And full disclosure, we already know each other from working together in the consulting space. So whilst I don't know all the answers, hopefully we will cover some good questions and insights together in this conversation. Welcome, Alistair.
Thanks, Tony. Nice to see you here.
Great to see you, and lots to talk about, I think. I covered a bit of your background there. However, in your own words, can you tell us a bit about your career journey to date?
Obviously, now leading a DA insured insurance startup. My background is not insurance. My background is banking, 30 years in banking. So I've been originally with, JP Morgan graduate, and then 10 years consulting with Accenture and Capco, 11 years with UBS, which took me from London, a few years in Moscow, and then to Switzerland, where my kind of major role there was the COO for compliance and operational risk control. I came out of there 7 years ago looking to do some more entrepreneurial projects. I discovered at that time in Switzerland, there was a big focus from the government and the regulators on digital assets and the branding of Crypto Valley. Got involved with Amina Bank, which was at the time called Sabre Bank, one of the two banks that were incorporated in 2019, focus on digital assets. And I joined them to build their control framework, which is a key component of the license application. And we launched the bank later that year. And after the launch, I was COO and responsible for their digital asset solution, as well as their core banking solution, operations and change, etc., as a normal COO. And essentially, it was that experience of having built the digital assets custody solution and then looking for insurance that gave me real understanding of essentially what I would describe as a disconnect between Web3 and traditional insurance, and an opportunity to create some value there by building a company with expertise that bridges the gap between Web3 and digital asset insurance.
So clearly a perfect grounding for what you're now doing with DA Insured, and we're going to get into that in a moment. But I always ask guests about how they spend their time outside the business. And I think you mentioned that you moved to Switzerland. I think you're still in Switzerland. So for you, perhaps that includes things like skiing. But tell us what do you do when you're not working on the...
It's a great question. So my passions are skiing and sailing. So I'm very lucky to be close enough to the mountains here in Zurich to go skiing with my family, who are now avid skiers. One of my eldest son is a ski instructor now, and the youngest does quite well amateur racing, but is getting very competitive at that. And in the summer, I love to sail on the lake, and we have a boat that we race.
Fabulous. I thought you said your children were average skiers then, and then you just said one of them was a instructor, the other one races. So I think you meant avid, but
yes,
indeed. Well, look, what a great place to be. So For today's conversation, I'd like this to be super practical if we can, really, because I know some of the things that you're doing at a really detailed level will be very interesting for the audience. There's lots to talk about, but before we get into the playbook for the fintech, essentially, let's start a bit with the DA insured business so that we have that context on what is the business that you're creating. And we'll come back to talk about some lessons learned and the future of the sector. So DA Insured, you said bridging the gap between Web3 and traditional insurance. So let's start there. Perhaps sort of what is it and what was the catalyst for this?
Yeah, I mean, maybe a bit of context. Obviously, digital assets is a super fast growing space. We've seen, and having been involved with the industry since 2019 in building the bank, I think we've been saying for a long time that that institutional adoption or mass adoption of digital assets is coming. And it always, happens a little bit slower than you hope, but it's been some real evidence points over the last sort of 6 months. We've had BlackRock advising 2% of allocation of portfolios to digital assets. There's some really interesting stuff going on payment side. We've got Swift's digital asset trials kicking off. We've got Visa integrating blockchain into their platform. And actually, end of last year, Goldman's were talking about spinning out their digital assets platform. There's a lot of investment. There's a lot of, I would say, traction now and evidence of traction coming from traditional finance into cryptos especially, but also broader digital assets, stable coins, and finally leveraging blockchain technology to make efficiencies in payments, etc. So lots going on. So when I say digital assets, I'm being broader in the context, not just crypto, but also when we get down the line, there'll be more tokenization of real world assets, which would be included in the same scope because all of those assets need to be custodied in a secure, professional manner. So what is DA Insured? When we're essentially, as a business, we've got it as a two-sided market. On the one side, we're developing loss models, data-driven loss models, expert underwriting for A-rated insurance. So insurance companies, we focus at the moment in the London market, but it's going to be broader than that. And on the other side, providing comprehensive financial crime cover for these digital asset custodians and exchanges. And that's really two quite separate focuses in one way, because what the underwriters need to see to get comfortable to engage with this emerging risk is professionalism in the risk assessment and exposure management. And what the clients need to see is policies that they can understand, an efficient process of engaging with that product, and trust that it's a real cover that they can rely on at the point of need when they have an incident.
So two separate components, but surely very tightly coupled because the underwriting models are providing the rails for the insurance policies.
Yeah, exactly. I mean, obviously, but what's interesting is it's an emerging risk class because there's something that, although insurers are playing a bit in this space, their expertise in risk assessing the space is limited. I mean, they have certain individuals that have much more knowledge than others, but it's not really standardized, and it's not really, actually, both in terms of the wording for the policies that are providing the cover and the exposure management and monitoring of that risk. So it's an emerging risk class, but blockchain has a significant advantage where there's a lot of data, public data, both about, just the nature of distributed ledgers and the public data that's available on the ledgers. But more importantly, there's a strong culture within the digital assets ecosystem around responding to incidents or essentially crimes. And so what we can do is we can use that data to create a proxy for loss events over the life cycle of the last 10, 12 years that helps drive these data-driven loss models. So you've got to know what you're looking for, and you've got to make sure you're filtering it on the right relevant events, because not all events are relevant to my target market, which is centralized regulated custodians and exchanges. Yeah. So you've got to be quite specific.
So prior to DA Insured, so if you're holding crypto holding or stable coins or other token assets, where would you go for insurance, or would you not be able to go really anywhere to insure those?
So the products do exist. So there's a few players in the market for some time. Not all of the solutions that are out there are what I would describe as core insurance markets, so A-rated paper. So some of it's lower rated paper or it's blockchain solutions that are that are trying to provide solutions in this place. What we're trying to do is provide a product that A-rated paper and traditional markets can engage as a main class of risks, not just a risk that's on the side of their desk. And that's one thing. The other thing is that the coverage solutions have varied quite a lot. So we're focused on financial crime cover, which is an idea of a cover that it will respond at the point of an incident, specifically related to a loss of financial assets due to a crime, an unauthorized transfer due to a crime. Whereas other products that exist, and the ones that people buy big chunks of, are specie cover, which is really vault risk. And in reality, that is not a significant risk that you're trying to transfer as a custodian. There's a very edge case that you'd have a physical attack that would result in loss of digital assets. But people still buy it, and they buy it because they can say they've got hundreds of millions of cover of this specie insurance. So it's a sort of marketing play, but has very little, I wouldn't say zero, but very little effective risk transfer.
It's a fascinating space, and you said emerging insurance class. So I imagine there's all sorts of challenges as well as opportunities that come with that. Perhaps it feels a little bit like the early days of cyber insurance, which is how do we calibrate for those loss events, what could happen, and how do we put covers in place, what should the premiums be? And it'd be interesting to understand how you're approaching the sector with this. There's probably an education point, and we talked about there's the modelling aspect as well. If you just read the headlines, you read yesterday's headlines, I don't know what's happened to digital asset insurance premiums overnight, for example. But I mean, it strikes me that as an immature market, it could be very volatile in terms of the risk levels or the perceived risk levels. And how do you really create a model around this and educate the sector and create a product in such a sort of fluid environment?
So I think there's two things. I mean, first of all, yes, you're right. I think there's a lot we can learn from cyber insurance and the development of cyber insurance. In fact, I was presenting at a cyber insurance conference a couple of weeks ago where I learned a lot about their journey as well, which is very helpful because there's certain elements of what they are now very sure about that they were, not so sure about at the beginning, that we can leverage. Because a perfect example actually is there was a big debate in cyber insurance over the years about the value of ancillary services around the insurance, and what there really seems to be like a lot of common agreement on now is you should not just provide an insurance cover, but you, as a minimum, should be providing incident response support on the basis that your client who's facing that incident is hopefully probably never going to have seen that incident before, and as much prep they can do at the point of things going, at the point of being hacked. Having people in the room that have genuine experience with dealing with those scenarios is super valuable. Plus, from my perspective, being able to have partners that can go in and as quickly as possible validate whether the policy is going to respond or not will give our clients more financial security or clarity around their financial security, which is super valuable. So that's something I think we can definitely learn. In developing the models themselves, our actuary actually has cut his teeth on cyber risk. So where you're both combining data or limited data potentially and expert judgment into a model that you can use to drive your technical pricing, and that's a super valuable skill, right? So and I think also from the actuary's perspective and the underwriter's perspective, people that have had experience in other emerging risk classes like cyber, it's very transferable and it helps us in terms of developing these models. What you then have is still a fairly new model, and so there's also a bit of loading you put on your pricing to basically put a bit of buffer in because you know that the model is not 100% yet. And a lot of our focus is on the continuous development of the model. So all incidents that we see that come up, we would put them into the model and make sure that we're adjusting our severity and frequency probability curves appropriately, adjust some of the expert judgment as well. And we just go through, regular iterations of the model to try and improve it. And the goal for that really is, we know it's not going to be perfect today. The pricing is a little bit bound by what the underwriters want to see, but we know exactly where our technical price is, and when we develop the model with improved knowledge and data, we can build a more sophisticated view. But without anything, you're never going to get to that sophisticated view. So when we talk to the underwriters, they were the ones that are on board. A bit of a shout out to Sompo, who've been a lead underwriter for us, helping us develop the product and access at Lloyd's. And we've got 4 other Lloyd's markets behind there. All who've been very open-minded to the development of the product, or the development of the models, and are keen that we don't just do this as what we have at the moment is a prior submit. So we do the assessment, give it to them, they sign off the risk, but move towards a full delegated authority, where we would sign off the risk ourselves as a Lloyd's cover holder. And the reason they want that is they recognize that they don't have the skills to do that expert-led underwriting and exposure monitoring, and they don't want to build that internally at this stage. So that's a so-called MGA structure, managing general agent structure, which I think is it's a common structure within insurance, but it was super interesting to understand the motivations for our partners and why they want us to build that structure and essentially have an outsourced underwriting capability.
So I guess we'll come back to that in terms of the fintech playbook and building partnerships, but a really interesting dynamic that you're the delegated authority as the experts in the models in that construct, even though DA Insured is early stage and small, and you're working with established players in the insurance market. And just to get a sense of the market here, target addressable market, what are we talking about here? What's the client base look like? Is it the centralized custodians, other platforms?
So it's centralized, regulated custodians and exchanges. Now that landscape is changing quite rapidly. There's a lot of people moving towards regulation now, which is great. I think, Bybit, to the experience that we saw over the weekend, they are still quite lightly regulated. They have a provisional license in Dubai. I think the rigor that comes with regulation is super helpful for this space. I think there's a lot of focus, having been through it myself with launching the bank in Switzerland. There's a lot of external audit rigor that needs to go into your control frameworks and operations and processes that gives confidence. And that's why for us, we're focusing on that market initially. For for the traditional insurance players, this is where we can play. That market we're focused in Europe and Middle East and Switzerland and UK. UK now obviously naturally part of Europe anymore, but there is a market, obviously a growing market in Asia and the US. I think regulatory environments in the UK, not in the UK, in Europe, are quite well understood with MiCA regulations coming in Europe. Plus, I would say in Asia, they've done quite a bit. Hong Kong's actually come in quite strongly now with some regulations, even talking about the necessity of insurance. It's a big market, it's a growing market. There's just within Europe, there's sort of 200 odd regulated centralized platforms. Not all of them may be big enough yet to be in scope for me, but they growing. And also a lot of traditional banking players now getting into this space, building their own custody solutions. So when you see cantonal banks in Switzerland building these solutions, something's happening. But that's going to be a big market as well, which is not included in that 200.
Okay, so brand new product into a fluid emerging sector in partnership with some of the scale established players in the insurance market, which traditionally hasn't been the most progressive and innovative sector within financial services. Ground up, interesting play. How's it going so far? Did the Davos Innovation Award help?
Well, I think, in terms of the journey so far, it's, my background, as we touched on earlier, is a lot of change management in COO roles in global firms. Even though I had experience working in smaller offices, I helped JP Morgan set up their office in Johannesburg years ago. I spent 3 years in Russia Moscow with UBS. I think one thing that you learn from working in smaller projects, and I had the same experience at Sabre and now doing it with my own company, is it's hard to tell who's going to survive in a startup environment. So even when you're hiring, it's very difficult to work out because a lot of people haven't done it before and they're walking into an environment where nothing really is done for them. So you have to be quite entrepreneurial in the way you do and operate on a day-to-day basis. What I've really found is the difference coming into founding the company in 2023 was a massive change in approach that you need to adopt. So your goal is to get to product market fit by spending the least amount of money possible. And the focus on validation or validating your idea is massive. And actually we were accepted into Tenity, which is a fintech InsurTech accelerator here in Zurich. And that was a big focus in 2023 with them, was really nailing down, with over 100 plus stakeholder interviews, do we really believe what we're proposing or our hypothesis for a solution is real? And it helped us develop product positioning, and then also work out, okay, so that's what we think we need or the clients want. That's where the market opportunity is. How do you bring the right expertise into the group to deliver on that? And that was a big learning out of 2023 was we needed insurance experts to join the team. So we went and found some insurance expert and then critically built partnerships. So there's a lot of partnerships, especially in an established market, that you can develop that are happy that you're bringing in that extra, your unique expertise, but are also happy to be innovative players and part of your journey and support you.
Well, that's the perfect link to the startup playbook, which is really where I wanted to focus the conversation. So let's dig into that a bit. And you already started to talk about product market fits. So important. Can we unpack that a bit? How did you go about it? You said you did 100 with the accelerator program. You did 100 interviews with with who? With potential clients or with?
Well, again, it's a two-sided market, so we had to talk to both sides. And I think the challenge you've got is that obviously you walk into any opportunity with a sort of your own hypothesis. This is what I think the market needs. This is what I think is a good idea. And it's a big challenge, actually. It's the hardest thing to do is to do the validation properly, because you need to maintain an open mind that what you're pursuing isn't the right answer or isn't achievable from your starting point. And so it helped us a lot in both understanding what the pain points were for the underwriters. So how are they doing it today? What would they like to do better? And what would they like to see being developed? And that's where we got into, developing the data-driven loss models as a point of difference, right? This is a bit of value creation for us in our project. And then on the other side, challenging around what is it we don't like about the current insurance policies, and basically they're not tailored to the right risks and they weren't very transparent. And that led us to the realization we had to write the language of the new policies ourselves, which at the beginning we didn't know we were going to do that, but it was clear that it was something that was necessary. So we invested in developing policy language ourselves. But that came out of these endless discussions with everyone who would listen or want to express an opinion. And we started the whole thing with just a concept of trying to build trust within Web3 and digital assets. And we had an idea that was an insurance play, but we didn't know. And then when we dug into it, we found that there was demand for quality insurance in this space, and that's where we kind of ran into that space. But you only get there by asking a lot of open questions and trying to maintain a bit of discipline around your validation.
That's really interesting. So that process of continual refinement, lots of iterations, and continuously recalibrating. And I didn't know that when you got into this that you had a broad concept for trust in Web3, because it's actually become a very narrow proposition. I've seen your pitch deck and it's super clear. And it's sort of what the marketing folks would call hyper niche, and they always say niche down on something. I think it would be true to say it is hyper niche. You're providing a product for a very particular problem in the sector, albeit, as we just discussed, there's a pretty decent addressable market and lots of potential clients who are going to need this product. But it's highly focused, and I love that about how you got there through continuous iteration and refinement. I think you also used. Well, you said it in your intro, you did it as cheaply as possible. And you've mentioned when we were talking before the show, use of low-code solutions in getting to product market fit. Can you expand on that a bit more of the sort of the practical toolings or aspects that you use to drive this?
Yeah, I think that's also fits back to the previous question as well. I mean, if you're going to get to product market fit, spend the least amount of money possible. I mean, especially entering as you say, a mature or market on the insurance side, partnerships are key. Partnerships are absolutely key. People that will be part of your ecosystem, understand how you fit into their ecosystem, and actually you get a decent amount of support through building partnerships, which is very helpful because they are established players, but also that's less investment if they're going to provide that support. So that's been a key aspect of it. The other aspect is around low code. I mean, in the end, until you've got a business and you've validated that business to the point that you've even built prototypes that people can engage with, which for us could be different things. I mean, we were talking about policy language is really a Word document. It's not much a piece of technology, but we have other kind of concepts within our underwriting process, which are technology driven. But getting there as fast as you can with a prototype, which you've invested very little in because it's a low code solution, help you validate your idea, right? And help you validate your idea with something real. And I think that's such a critical strategy. I was at a founders event in Zurich last year, listening to some founders that had been successful. They were in their scale up phase, and every single one of them said about low code and AI, if only they had it when they built their companies, life would have been so much easier, because you don't have to go and raise hundreds of thousands of capital to get even a kind of fairly small dev team together to build something before you can test it, right? So it's a much smarter route now, and I think it's there's another phrase that came out of the Tenity program which I always rang in my head was, if you have known unknowns, if you have areas of your business that are critical to your success, but you haven't not 100% sure whether it's right. Are the clients going to buy it at this price? Is there a route to market from a sales perspective that is reasonable for you in an established marketplace? For us, that was a good risk. If you don't understand the answers to those, you should not be building anything. So you have anything in that category, why are you investing? Because you don't know enough to invest. And I think those are very, very good lessons learned. And of course, you get carried away and you start moving ahead with stuff as soon as you see it. But trying to maintain some discipline around that, especially around any significant investment around technology, is super important.
Yeah, and I know that you're investing in the data modeling, in the underwriting models. You mentioned the policy language and that being, just textual. But that low code prototyping of a product that you could show to people, anything in particular that you use? I mean, which low code platform do you use to throw something like this together if you're a aspirational founder at this stage?
Yeah, so nowadays websites, that's all pretty straightforward. There's a lot of fairly low code answers to websites, which you can do super quick, right? Bubble and Disco and all that. So there's things you can use. I think that's clearly an advantage. When it came to the more technical side of what we were doing in terms of, for example, we have it's not an onboarding, it's an online application process for our clients, which is, Web 2, but it's sort of the minimum that our Web 3 clients would expect. Whereas previously, a lot of the process is just PDF documents. But to do the online application process, leveraging platforms that have built the core of that technology that you can embed into your platform. Again, it was a low code implementation for us essentially, and was super helpful. And we use something called ClustDoc that's doing that for us. And I just think in general, the idea of low code platforms with healthy kind of integration, pre-built integrations. We specifically use Zapier for integrating on various fronts or automating on various fronts. And I think that's, good platforms, good integration, things like Zapier to do automations will get you most of the way you need to be, and where possible and where appropriate, embedded AI.
Yeah, and I think this is one of the things I love about, and I was looking forward to in this conversation, is that, and you're a little understated, Alistair, and you say, we use a little bit of Zapier, a little bit of AI. You've shown me prior to this conversation some of the things you're doing, and I think it's much more systematic and automated and leveraging the available tool set than I've seen in many other initiatives. And that sort of practical focus on efficiency and automation and a systematic way of doing things and covering the whole of market is something that I think many early stage initiatives overlook, and they sort of focus on a much smaller subset of low hanging fruit or easy conversations to have without doing the full market funnel, which you are doing in a very systematic way. So I get we'll come back to that. I mean, I do want to dig into the sort of the sales automation bit in a moment. Just on the broader lessons learned. So we talked about using low code, product market fit, building partnerships. The team, who's on your founding team? This is a small team, right? And so who does everything? Because, I think back to the early days of our consulting business, and there's all this practical stuff, right? From designing your logo and registering your URLs and the admin and everything else and the operational pipes that go with starting a business. And, you often, I think you find, unless you're well funded from day one and you're bringing a team or doing this in collaboration with a scale player who are providing all of that ancillary capability, you find you just have to roll your sleeves up.
So one of my lessons learned is get used to doing everything. That's the challenge. So very interesting. So when actually I got involved in this project with my co-founder Vitis Kaunauskas, who is a young Colombian who was here through the Global First program, which was promoting entrepreneurs in Switzerland from Colombia. And we met because he was looking for some board advice. And then when we got to know each other, we essentially co-founded the company together. So very, very helpful as I'm now a 50-year-old man and coming at it with my industry experience, but Vitas came with a lot more, free thinking, and it was super powerful, right? To have that mix of experience and capability. So when we did the first parts of our startup, we combined very nicely. We had a very diverse set of skill sets bringing to the problem, which I thought was very, very helpful. And when we went through the back end of last year, we really needed to, or actually through the whole of last year, we needed to have these, much more experienced insurance expertise in the team. And that's where we teamed up with UWX, Tony Buckle and John Carolyn, who are also now part of the executive team. And they're both experienced insurance executives. So Tony used to be the head of specialty risk at Allianz. John was the CEO of something called B3I, which was a blockchain initiative in insurance. So both John and I are very kind of hands-on in terms of automation. He's a bit more technical than I am, but we also have a passion for automating businesses. So I think one thing I know from experience is if you're going to have that objective, that has to be a passion from the people at the top of the organization. Otherwise, when I say, my example, we talk a little bit about the client stuff. I had a look at having to assess hundreds and hundreds of these clients, and I could either sit there and do that myself, which would take a long time, or I could sit there and build the automation to do that, which is what I did. So if you're not doing that yourself, then when you build the team out, the expectation from the team to continue that focus on automation isn't going to hang in there. So I think it's super important to have it as a clear strategy and passion.
Yeah, and I think the point about the composition of the founding team is really interesting. I sometimes refer to this as the wisdom of experience with the talent of tomorrow, because I like a catchy phrase, and that's what we've been doing with the Next Wave team as well. And when you are in your 50s, as I am as well, you just get so much from being open-minded with the next generation and what they can bring, and working with a really talented early career group. Sometimes they're just able to do things in a way that you hadn't really thought about and didn't know was possible. And the combination is very powerful. So let's talk about the sales automation aspect a bit, because this is something that I've seen a bit of what you're doing. You touched on it a couple of times. And so you've got a target addressable market in, I think, UK or UK Europe. You said sort of a couple of hundred regulated platforms that you could go after, and you could sit there and try and pick through LinkedIn and find the right people at each one, and then filter each organization as to prospect as a potential customer for DA Insured, or you could get a bit of help. So perhaps you could talk for a couple of minutes about how you did this in a more strategic way using automation.
Yeah, so I think I mean, first of all, I think we've all been playing obviously around with AI and the use of, ChatGPT and others to try and understand how they can help us. And also, I have to say, back to the context of you have to learn to do everything yourself. I found that incredibly helpful because you can be looking at a blank sheet of paper when you're trying to do a bit of marketing or you're trying to find out about something that you need to organize for your, for your license or not license, but your registered company, just anything where you're not the expert, but you would normally spend half an hour on the internet looking stuff up. You got so much more access to that. And when you learn how to use AI well, it becomes faster and faster. When I was looking at this problem, I wanted to understand how I could use AI to do the due diligence. And of course, it's very helpful for that. So you can learn how to prompt engineer an instance of an AI that is trained to respond to, in my case, it's 20 questions, and the last 3 are very, very, blunt. Are they my target clients? So regulated custodians or exchanges in the target markets that I'm working with. And as soon as you've got it to give you the granularity, not just the background, which is helpful, like the kind of more free flow text, but then get it to be specific about certain yes/no questions, you can then automate that into a workflow. So I then automated that in Zapier. And so Zapier gets triggered by a new entity in HubSpot. It runs the due diligence. It comes back with the answer. It puts it into a note in HubSpot. And if it is a target client, that then it creates a deal for that client into my pipeline with various information and sets it up for me, which I then have to review, right? So it's not, you can't trust everything that AI generates, but it's as an 80-90% answer for a starting point for your assessment. It's very, very helpful.
Yeah. So look, I absolutely love that. So let's just revisit that just to walk through what Alistair just said. So 200 or so target companies, how do I profile and capture the key facts about each of them and put them into my CRM in an automated way? So you developed some prompts on ChatGPT, tested your prompt engineering to be able to extract the DD information, 20 or 30 or so facts and fields about one of these target firms. You develop that in ChatGPT, and then you port that prompting across to Zapier. And I didn't know this until we looked at it, but Zapier has embedded AI and a really powerful workflow capability. So you can use AI directly from inside the tool, and you can build a visual workflow, step-by-step process. I think yours is 12, 15 steps or something. And it calls out and it gathers the data points using the prompts and then pulls them through the Zapier workflow and creates objects in your CRM. And I think your CRM is HubSpot. And it actually sets up the company and it fills out all of the data fields that have got the background DD information that you want, like the size of their business and where they operate and what types of insurance they provide and what's on the platform. I would have got some of that wrong, but anyway, there's a bunch of data and it goes into the CRM and then it puts a deal into your deal pipeline. So you've literally got something sitting at the top of the funnel. Now, it's not qualified from a sales perspective, but the data's there. And then you can take that into your outreach process.
Yeah, exactly. So then that's the start of the hopper, as it were, and then you can work it through. Yeah. And I think to get there, just to be clear, I am not a coder. So when we talk about low code solutions, we kind of really mean it. And so I spent quite a lot. It took me a while, right? It took me a while to learn how to get the prompt engineering right. In fact, I ended up using AI to help me do the prompt engineering for the AI. So it was very recursive, but actually very doable and helpful. Of course, you can just test it. And then the Zapier piece, again, it takes it's like any of these tools. It takes a little bit of getting used to. But once you've got, what I like about, these types of automation platforms is once you know how to use them, you quickly realize you can apply it to all different parts of your world. And it is a point and click. And when the point and click doesn't work, it does have options for writing code. And when I've had to do that, it has embedded AI. I just describe what I want. It writes the code for me. So it's at no point have I had to turn around to anyone and say, can someone help me write this bit? So that, I think, is a big step because I think if I was trying to do that 2-3 years ago, I probably would have hit a roadblock.
Yeah, and we've talked a lot on this show about AI plus automation, that sort of useful AI description, and it's still sort of patchy, I think, across the sector. There's a lot of Gen AI activity, but actually embedding in a workflow. I know this is a simplistic one. It is prospecting and DD information, but it is genuinely useful. And I just love the fact that you've engineered that from the beginning, and it's saving you hours, and you've got a scalable outreach and a CRM process as a result.
Yeah, and I think that, there's a principle, which is when you look at a job where you should keep doing repetitively, you should ask yourself, how long will
on
it
the
take?
operations side, have you been automating the operational aspects of the business as well?
Well, very much so. So the online application form is not just to make the submission easier and more, Web 2 for the client. It's also to create a framework for automating the production of the risk assessment report. In the application process, the clients will submit documents. We can, when we do use AI to help us, sift through those as well. And in the risk assessment process, although it's not 100% automated, because actually I tend to want to write the risk assessment myself as a first cut, and then I use AI to put it into the report in a way that is consistent. So it's a little bit, as you say, kind of manual and AI embedded in the automated process, but it means we can perform the risk assessment, generate the outputs with very little, manual effort. It's just cognitive effort, which is fantastic. And then after we have that approved and generating the quote for the client, it's 100% automated. So it's if you do that, if you start with that framework at the beginning, then every extra step you're making is going to incrementally improve it and it creates also a lot of consistency in what you do.
Yeah, so this is using AI as a co-worker to create the risk assessments and to automate the quote process. I think, by the time DA Insured is a scale player, which based on current trajectory, may not take too long, I think we'll have agentic AI all the way across the sector. And when it comes to claims payouts and claims operations, you'll find that it's AI agents that are handling all the, I was going to say paperwork, but there won't be any paper involved, but handling all the administration and the loss assessment.
But I was reminded the other thing, so we're talking about agentic AI, which obviously is another level, but I have different AIs that I have, prompted for different topics. So I have an AI that helps me with sales copy. I have an AI that helps me with the due diligence, and you can just create these sort of slightly different characters, but it makes a big difference in terms of how quickly they will give you something that's useful if you spend the effort to prompt engineer them properly.
Yeah, well, those are agents in that sense. It depends. You can argue how much agency they've got, but they're certainly AI personas. And for the audience who may or may not have listened to the episode I did recently with Simon Torrance on agentic AI, it's worth a listen because there's a big insurance use case in there, and it's a short hop from creating those AI personas to actually connect them to talk to each other. And what Simon did is put them all on the same Slack channel, and they literally were handling insurance claims. So by talking to each other, and you can track the conversation in real time on the Slack channel. And in fact, the humans were on it as well, up to the point where the AI said, "I'm not quite sure why you're on this team. What is it you're doing?
You're not contributing."
It's a real story. So check that one out. I think in our sequences will either be 1 or 2 episodes earlier than this when we publish. Anyway, looking a bit further forward, and we will run out of time if we keep talking about tooling automations and playbook. And I could talk about it for a lot longer. I think we'll lose the audience. So let's switch it forward a bit. The future of digital assets. So sort of coming back to the business sector in your space. We talked about custodians, regulated platforms, loss insurance. Alistair, and you're clearly in this space, sort of up to your neck in this space. Well, what's the future of the sector from your perspective?
So I think there's a lot of chat about, cryptos. That's where the main use case for blockchain and digital assets has had a lot of traction. And we're moving into a world where there's more interest in terms of investment in those cryptocurrencies. I mentioned, BlackRock's advice earlier in the session, but There's also a big world of stablecoins and basically driving, or central bank digital currencies, basically driving efficiency in cross-border payments through blockchain, which is, someone once described it as the difference between sending a letter internationally and then email arrived. That's basically the step difference in efficiency that the two technologies can deliver. But beyond that, in in digital assets, there's clearly lots of other use cases around tokenization of real-world assets, which I think we're just seeing the beginnings of. In all of these cases, you really have to understand, it's not just a technology solution. So you can tokenize anything quite easily. The challenge is if you create the playground, you need everyone to play in the playground, and creating those marketplaces for those assets is the next major step in development, which is coming.
Yeah. I spoke to Kin and Louis on this show about stable coins and particularly the Asia crypto and fintech scene. But I do remember one of the things he said to me was that a SWIFT payment took longer than the international flight between Singapore and the West Coast, I think. So to your point about letters and email,
you could have delivered the letter.
Sorry, I thought I kind of jumped in there, Alistair. I think
Right.
So did you want to carry on with the other aspects that your predictions for the digital asset sector?
So I think, look, that's where that's probably the kind of key points for me. I think there is a challenge around security, and we talked about this by a bit, a hack over the weekend. I do think that in the space of security, it's 2 or 3 kind of really key areas for me, which were around the importance of not just, the importance of controls and control frameworks around transactions. There's a sort of balance to be made between convenience and security. So how do you give more functionality to your clients, but whilst maintaining very, very tight security? And I think there's a role also for regulators in this space who are, when they are engaged, are focused on these types of control frameworks and control outcomes, but supported by external audits, external, penetration testing and code reviews and all that good stuff. So there's a little of sophistication that we need to get to. I think we've come a long way, a long way, especially in terms of the reliability of third-party custody platforms in the last 5 years. But we need to keep focus, and it's not something that is once and done. It's something that these custodians and exchanges will need to continue to invest and improve. And I think that's super important. However, just saying that in a comment, a couple of observations from the incident last week is critical is to have a plan for when you do get compromised, and be able to execute on that plan quickly and have very, very open communication and transparent communication. That's vital. Have a plan for how you will recover quickly, because the longer that your platform is down, the bigger trust issues you build. So it's important to react fast. I think also we saw it again this time, and I think it's been the same for a long time, but the response of other players in the market has been super helpful in terms of helping with liquidity and tracking assets that have, left the platform and recovering them over time. It'll be interesting to see what the net loss is after those efforts. There's lots to learn actually from this incident, but also in terms of direction of travel in the move towards well-controlled, regulated custodians and exchanges that can therefore support the adoption of these assets more broadly is super.
Yeah, I think it's really interesting, that point about incident response and having a plan, having that sort of built in. I think you earlier in the conversation you were explaining that that's an important part of the insurance provision as well. So just on, and I was going to touch on it at the start of the conversation, we've picked it up at the end, the loss, the buy bit loss. I mean, things like that. What does that do for DA insured's market? Because on one hand, it highlights the importance of insurance. On the other hand, it sort of potentially weakens confidence or may shoot premiums up. Or so sort of, what's your perspective on that one?
Yeah, I mean, I think first of all, it's important to know or to realize, is that incident, I have 2 people to serve in that process. One is my underwriters. Is this a risk we would have taken on? And in broad terms, I mean, they're so big. The really, really big players, I don't think buy crime insurance. I think they have so much capital and they have supporting the trading activities and the custody that they do. So I'm not convinced that they're that scale in the market for my products. That's the first thing to note. Second one is the level of regulation probably wasn't good enough for me to accept them at this stage. They, as I say, very lightly regulate, or not properly regulated, I would say. And then the third one is it's super hard from a distance to say whether their controls and procedures would have been acceptable from our underwriting perspective. But what I would say is that as they move towards regulation, it is precisely that type of security vulnerability that the regulators are super focused on. And basically, what are you doing to manage the risk of unauthorized transfers out? The process of getting regulation would have made them more acceptable to us and potentially could have helped with, stopping that vulnerability from occurring.
Yeah, it should provide a boost, I think, for your proposition, but noting the point that you wouldn't have risk accepted that organization in the first place. That's interesting.
Whereas on the other side of the market, with the client side, it's another evidence point that there is a risk that needs to be managed. And, I always talk about, if you have assets under custody, that's your inherent risk. You have all these controls that you've built and governance, and there is a residual risk. And all financial institutions globally, they look to insurance to cover that residual risk. And that's where I think we've got a product that is fit for purpose, focusing on unauthorized transactions, work out how much of that you are at risk to, given your control framework, and have appropriate cover. That's the plan.
Yeah, well, I'm going to be following DA Insured's journey with great interest. I think there were some real nuggets in that conversation for anyone who's an aspiring founder or perhaps already a founder. There's aspects of using the available automations and AI and working on your systematic prospecting and product market fit. Absolute gold in terms of advice, I think, for those who are on the startup journey. Any takeaways from you, Alistair, for the audience? Anything that you'd say that if you take anything from this conversation, I'd love you to remember?
The one thing that I tried to emphasize it earlier, but I'll give it another go. Product validation is so important. It's the temptation to do rather than validate is so high. And every time you make yourself spend time on validation, that's super important. And the other point, which I think is an obvious statement, but one that, when you then, after you've got to the point that you've got a product or at least a prototype, never underestimate how much time it takes to build a market presence and engage client traction, which is our focus at the moment. That is, everyone has to sell. There's no excuses. And as we're building our client traction now and our broker relationships, those are super important to us. And also as we go towards our seed round, with some clients under our belt, we'll go and raise some money.
Yeah, well, looking forward to that. And I think there are so many examples of fintechs and wider sector startups who just overlook that fundamental that you've got to drive sell. You have to create the demand. And I've had some great conversations on this show from founders who've realized that, who've had wake up calls, rolled their sleeves up, got out there, worn out some shoe leather, knocked on a lot of doors. You just have to do it. And so, yeah, I think that's probably top of the pile for me, actually, in terms of advice from this conversation. Alistair, reading and listening currently, anything interesting in your spare moments that you're reading at the moment?
Not really. I'm pretty busy on startup. Yeah, I think honestly, not a lot. We do a lot. My downtime is physical activity and my uptime is cognitive activity.
Well, the right answer is London Fintech Podcast, of course.
Of course, yes.
or educational posts on LinkedIn. Right. Well, where to find out more, Alistair, about DA Insured, or to contact you directly?
Yep, dainsured.com. We have contact us forms on there, and also if you want to become a broker or a client, relative calls to action.
Yeah, very good. Yeah, I would urge everyone to take a look. I think that this business has been super well framed. It's such an interesting positioning in early stage development in the sector. So it's going to be fascinating to watch the journey from here and where they go next. Alistair, thanks for your time. Thanks for sharing all of your insights in today's conversation. And as ever, for the audience out there, please share this around. Do get in touch with me or with Alistair if you want to find out more. And thanks again.
Thanks, Tony.